Buy the dip. Buy the dip. I'm sure you've heard that 1,000 times, whether it's from friends, whether it's from online forums, whether it's from television. In my opinion, I hate that phrase. I never say buy the dip. Why? Because that's only about half of the equation. On your chart right here is a great example of buying the dip. If an individual looks here, this is on a micro gold contract, and this is on a daily time frame. And this was not too terribly long ago. It was about a year ago or so, where here's an example of where buying the dip could have had really bad results. As we see on this chart, market is pushing up, pushing up, pushing up, and then gives a pretty big dip. So a lot of people at this point right here are saying, hey, we should start looking to buy here with the expectation that this is probably going to go up to a higher spot. Well, once again, that's only about half of the equation. Why? Well, let's see what happened if someone were to buy right here. It started going your way pretty decent. It would have been okay. Okay, that's great. That's great. Oh, wait a second. Now we're back to where we started from, and we're in this for a little while, about a month or 2 months, and then, ooh, disaster striking, disaster striking. We're pushing down, coming back up, pushing down, coming back up, pushing down, and it's just continuing this trend of just up and down, up and down. Had you been in this, this would be just a colossal headache. And when you were thinking the market's going to come up and you're going to make all this money and it's going to break through, in reality, you just got beat up pretty good. So one of the things that I look at when I'm looking at a trade is when it makes sense. So when I hear that phrase, buy the dip, I say you're only about half right. What you want to do, in my opinion, is buy low prices in the buy zone. And what does that mean? When the market gives us indication that it's going to be starting to push back up, that is when we want to look to buy the market, look for buying opportunities. So with a situation like this isn't really giving me the information I need. This is telling me, for the most part, the market's pushing down and it's providing a low spot. And what I want to see is some indication that the market is going to be breaking up, meaning we have some information right here saying the market likes to stick around this point. I'm going to put on just a little level right there so we can see. Market's bouncing here, bouncing here, bouncing here. It's a price level that the market likes to adhere to. It likes to almost act like a magnet towards. We also have a down angle signifying that the momentum of this market is pushing to a lower price. So what I want to see is breakout conditions when the market is telling us we want to go up to a higher price. And when I see a dip like this, which would qualify as a dip, low price, if we were to take that opportunity without waiting for that signal that the bulls are going to be bringing price up, things like this happen. So what do I look for when looking for a trade? Opportunities when it makes sense. So for me, I buy low prices in the buy zone. So I'm looking for the market to break a counter trend line, break through that key level, and when it makes sense, I get in at a low price while we start seeing the push. So let's see an example of when I would look for a buy trade. First off, I'm recognizing that's my angle. The market is pushing. This is a sticky spot where the market is bouncing around. Then I can use that same angle to develop a channel. It's going to cut through a couple candles just like this. You see it? But we also see that's where the market tends to stick to and show us those reversal points. So what I want to do is let it dip, let it go down to a lower price. But I'm not buying here. Where I'm looking to buy is when we start seeing the signs of life that the bulls are going to start bringing it up while it's at a low price. So I'm going to zoom out and look right around here. And as we see, this market is respecting the angle. It's respecting this trend. So what I'm going to do is once I recognize that we're on the right side of this, which is what I call the buy zone, I look to buy when it makes sense. When does it make sense? When I see bulls are in control. Is it making sense here? No, 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 no. So we don't do anything while it's down in this levels. I can see that it's respecting it right around here. So we can see the test, the pullback, the test, the pullback, the test, the pullback. What I want to do is see it's going to start breaking bullish, start pushing to higher levels. So what I'm going to do is use a horizontal line tool and map out a spot where I see the market sticking to quite a bit. And right here, we see a lot of that. We see the lot of fighting. Market touches, bounces, touches, bounces, touches, bounces, touches, bounces. It's a respectable level that the market sticks to. So what I want to see in a situation like this is I want to see the low price somewhere where the market was, and I want to see it above the angle, and I want to see it close, not just test it, not just get up and then come back down. I want to see strength that it's going to close above this. And as we see, it did this here where it tested up and then failed. I want to see this is going to be powerful and move up. So what I want to do is look for a condition when we're at a low price in the buy zone with that momentum, the other half of the equation to that buy the dip phrase. So what we're going to do is look left, and right there's an opportunity to look to buy. But I want to see bulls are in charge. Are they there? Possibly. It could also be a test. There's a test. That's my control. So for me, this right here is when I'm looking to buy the market, buy the dip, as you would say. I call it buy low price in the buy zone. So at this point, this is where I would make my entry. And I color my entries green. And what I'm going to do next is set up my stop loss, which is down here, pretty much below those lows before we started seeing that breakout occur. So my stop loss will be down here, and it's nothing scientific. I'm not doing any complicated measurements. I'm just looking for an area at a low price where if the market does come back down, I'm not getting taken out at a ridiculous level. So then after this, I will use my ruler tool and measure it out and determine my risk. This is a pretty hefty risk, and this might take a little while because it's a bigger time frame. This is a daily time frame. So if I'm making a decision to make an entry here, it meets the criteria. It's a dip. It's at a low price in the buy zone, meaning we're seeing the progression up. Does this meet my threshold? Am I accepting of this risk? And if I do, then I can make some decisions on where I expect the market to go. And what I like to do is when I'm plotting out my locations where I expect the market to go, from here, if I'm looking at that entry right there, what I want to do is find where the market's been prior, where the market has stuck before. And I'm looking here, I see areas right here, see other areas like right here. Keep going back and I see more areas like right here where the market likes to stick to and show me where fights happen between bulls and bears. So if I look here, we have some opportunity. Let me just zoom out to the right-hand side, like right there. And if I'm looking to just get a little bit, get to this level from this entry point, I'm looking at about a 670 tick win. So I have to measure it out. Am I comfortable with that amount of win versus that amount of loss? Maybe I want to go for a little bit higher level, like maybe this. It's getting closer to 1-to-1 risk to reward. Maybe you want to go for this here. It's going to take a little bit to get to it possibly, but it's pretty good gains. So at this level, we can make that determination. Do we want to buy the low price in the buy zone, and where are our targets? So if we make that decision, Let's see what would happen. Maybe we only want to go to that first level. If you define your risk, put it down there. Starts looking good. We got that first one. It just touched it. That would have been a take profit on that one. Or we could just let it sit there and you would have got it on that one. What about to the next level? Got it there. What about the next level? Got it right there. This is why I hate the phrase buy the dip, because the trend could continue on and it doesn't make sense buying that dip to me if we don't see that momentum of the market pushing up if we're looking to buy.